It starts with something small, a missed payment, 30 days late. Not because you didn't have the money, because you forgot. No phone call, no warning, no sirens. Just a quiet number changing in a database you will never see. And from that moment on, your life gets more expensive. Not dramatically, not all at once. Quietly, systematically. This is how a bad credit score ruins your life. And most people don't realize it until it's already happening. Right now, millions of people in the US, the UK, and Canada believe the same thing. If I make decent money, I'll be fine. If I have savings, I'm safe. If I don't take loans, credit doesn't matter.
This is amazing.
That belief used to be true.
This is great.
It isn't anymore. Because credit scores were never just about borrowing money. They became something else, something bigger. A trust score, a permission slip, a filter that decides who gets access and who pays extra for everything. Let's slow this down. A credit score is supposed to measure one thing, how likely you are to pay back money. That's the official story. In the US, the most common system ranges from 300 to 850. Above 740, you're considered very good. Below 620, things start to break. But here's the part most people miss. Your credit score doesn't measure how much money you have. It measures how predictably you behave inside the system. You can be broke with a high score. You can be wealthy with a low one. The system doesn't care. And that's where the damage begins. First, borrowing. This is the obvious part, so people stop thinking there. Let's say two people want to buy the same car, same model, same price. One has a strong credit score, the other doesn't. The difference in interest might be 6% versus 16%. Over 5 years, that's not a small gap. That's thousands of dollars for the exact same car. You didn't get a worse vehicle, you didn't get worse service, you just paid more for being labeled
I'm
riskier.
Here to protect you.
And it doesn't
With all
stop
these
there.
shields, you're
Now zoom
safe.
out. Housing. Landlords don't just check income anymore. They check credit. A low score can mean higher security deposits, a cosigner requirement, or a flat rejection. Not because you can't pay rent, but because an
So, we've
algorithm
completed the first
decided
two
your
items.
past behavior
Yes,
makes
and the
you
final one is done now.
inconvenient.
Great.
And
we're all
here's
set.
the irony. Missing a payment often happens during financial stress, job loss, medical bills, family emergencies, the exact moments when stability matters most. And the punishment for those moments? Higher costs going forward, which creates more stress, which leads to more mistakes. That's not an accident. That's how the system stabilizes itself. Now let's talk about something people don't expect: insurance. In many places, your credit score affects how much you pay for car insurance. Two drivers, same age, same record, same city, different credit scores. One pays significantly more. Why? Because insurers believe people with lower credit scores file more claims. Not because they're worse drivers, but because financial stress correlates with risk. So again, the system doesn't punish behavior. It prices anxiety. Next comes employment. Not all jobs, but many, especially roles involving money, data, or responsibility. A background check includes credit. A bad score doesn't automatically disqualify you, but it raises questions, unspoken ones. Is this person unstable? Are they desperate? Are they a liability? Notice what's happening. Your credit score slowly escapes finance and becomes a character judgment. And once that happens, everything changes. Here's the uncomfortable math. Payment history accounts for about 35% of your score. One late payment can drop your score by 50 to 100 points. It doesn't matter if you've been perfect for years. It doesn't matter if it was a small amount. The system doesn't forgive quickly. Meanwhile, carrying a balance too high relative to your credit limit quietly hurts you every month, even if you pay on time, even if you never miss. Using too much of what you're allowed to use looks risky, so the system rewards restraint, but also rewards constant participation. If you don't use credit, your score doesn't grow. If you use too much, your score drops. You're expected to walk a narrow line forever. Now let's expose the part nobody advertises. A good credit score doesn't save you money. It prevents you from losing extra. You don't get rewarded, you avoid penalties. The entire system is built on differential pricing. Same products, same services, different costs. And who pays the most? The people least able to absorb it. That's the quiet cruelty of it. A bad credit score doesn't block you from life. It taxes you for existing. Every loan costs more. Every emergency costs more. Every mistake echoes longer. Meanwhile, marketing tells you the opposite story. Build credit responsibly. Improve your score. Just follow the rules. But here's the reality. The system assumes stability as a starting point. If your life is smooth, credit is easy. If your life is chaotic, credit becomes a trap. And once you fall behind, climbing back up is slow by design. Late payments stay on your record for years. Collections linger. Mistakes age like scars. You can do everything right today and still pay for yesterday. Now zoom out. Why does this matter right now? Because we live in an era of thinner margins. More people rely on credit for basics. More expenses are unpredictable. More income is unstable. And the system hasn't adapted. It still assumes linear careers, predictable paychecks, controlled spending. Those assumptions are outdated, but the penalties remain. So a bad credit score doesn't just reflect past trouble. It locks future risk into place. And here's the final irony. Most people don't understand credit until it hurts them. And once it hurts them, fixing it requires time, stability, and discipline. The very things they lost. So the question isn't whether credit scores are useful. They are. The real question is this. At what point did a number meant to measure repayment quietly become a system that decides who deserves financial mercy? And what happens when more people fail that test at the same time? Because if credit scores are supposed to predict the future, what does it say about a system where one mistake can follow you longer than the lesson it taught you?